Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, we had the S&P touch 2,900. It is pulling back. We're now below about 2888, which is a level we were watching, a minor support level. Now, there is strong support down to 2878 to 2882. This is a level, though, that aligns with that January 2018 high. We've been talking about it, and the market is ultimately bullish above it. However, we did note that there is an exhaustion point right above 2,900. 2,907 is what we were keeping our eyes on, and it didn't quite get there. But you don't want to be squeezing that last bit of juice out of a lemon before this thing is ready for a little bit of a pullback. However, to the downside, if it does get below 2866, 2867 area, that's going to encourage further selling. You could start to see that thing really drop sharply. But those are the two levels we are watching here as the day goes. And today's close is going to be crucial, but tomorrow is going to be a pivotal session as well. You got ECB early, then you got as well the CPI, U.S. CPI due at 7:30 a.m. Central Time, and then the Fed minutes later in the day. So keep an eye on all that as we head into tomorrow. And it's not a surprise to see a little bit of profit taking ahead of that. Now, moving on to crude oil, this thing has ripped up. It's gone to the highest level since November 1st, and it is not a surprise here either to see it come in a little bit before the data. Got API after the close today, EIA tomorrow. There's a lot of support levels to watch, though, and right around 63.5 to 63.70 was the level we ripped through yesterday. That right there is going to be the first support, and then about 62.56. And then, of course, you got as well support at 63. There is a lot of levels down here, and it's going to be whether fundamentally that inventory report gives it a reason to break through those, or does it consolidate higher? Right now, expectations are for a build on crude oil. You're going to watch production very closely as well. So keep an eye on all of that. And then lastly, got gold in the safe havens. You saw a nice move early on with gold pushing out. There is strong resistance, 1312. The treasury market moved up early, but they've come in just a little bit here as the day has unfolded, despite a miss on JOLTS job openings after that move higher early this morning. They're consolidating. It's a nice tape on these safe havens. We like them both, gold and treasuries, heading into tomorrow. But manage your risk. Tomorrow, you don't know what you're going to hear from the ECB, though they were very dovish at the previous meeting. You don't know what you're going to see from CPI, though inflation hasn't been there. And then you don't know what you're getting from the Fed, though they have started to move towards dovish as well. But how much of that is priced in, and how much of that will, if they are more dovish, then you got some great upside there on both of these. But watch and manage your risk as well. At a minimum, gold is a great thing to see it close out above 1306 today. That was what we wanted to see at a minimum here today. Give us a call, though. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.